Greetings, ladies and gentlemen. Welcome to Nostec Academy. In this video, we're going to look at the business studies, grade 9, under grade 9. So, we're going to answer 2023 question and trading and profit and loss account, including the balance sheet. So we're going to answer everything. Okay, we're going to answer the whole of this question, and it's 20 marks. All right, these are the type of questions that you should know when going to write an exam as a grade 9 candidate, because they carry a lot of marks. Look at this. This is already 40 marks. So if your balance sheet balances, so it's a guarantee that you've gotten yourself 20 marks. Okay, if everything is all right. All right. So without further ado or much delay, okay, let's just jump right in and start solving the question. All right. So the question. This is the information we are given. So the very first question here, we are asked to prepare the trading and profit and loss account. So here we're going to write the title, and our title will be the name of the person is B Muchimba. So we're going to write B Muchimba, Muchimba's trading and profit and loss account, all right, for the year, this for the year ended, this is 31st, so for the year ending 31st May 2020. All right, 31st May 2020. This is the title. Make sure you to write the correct title. The trading and profit and loss account is prepared for the year as the year is ending. Okay, for the year ended. All right, it's not prepared as trial balance and balance sheet. All right, so the first thing, we're going to write the trading account. Now, the trading account consists of items such as, now before we go to the items, make sure to indicate things that go to the trading account first to make things easier. Sales will go to the trading account. Okay, let me just tick. Sales will go to the trading account. The opening and the closing stock will also go to the trading account. Purchases will go to the trading account. Returns inwards will go to the trading account. Discount received, no. Discount, what's this for? Discount allowed, no. Oh, this is rent discount, sorry. Capital, carriage outwards, bank overdraft, insurance, expenses, creditors, debtors, office equipment, cash. So these are the only things that go to the trading account. So we're going to start with the very first thing, which is sales. Let's write the currency we are using. We're using kwacha. Okay, we're using kwacha in Zambia. We start with sales. So we're going to write sales. Now, before you indicate your amount, check if at all you have sales returns or returns inwards. We have returns inwards here. Returns inwards as 400. So the amount for sales, which is 44,000, will be in the middle column here, and it will be 44,000. Okay, 44,000. Then we are going to subtract. So we're going to say less returns inwards. Okay, let's returns inwards. We're going to subtract the returns inwards of the sales returns. We're going to say, this is 400. So we're going to say 400 there. So to show that we're subtracting, we put in brackets. All right, we close. when you subtract there, 44 minus, so 44,000 minus 400 is giving me 43,600. Remember, you put on the in the last column after subtracting. Now, someone may ask, what if we don't have sales retains or retains inward? What do you do to sales? Sales goes direct to the last column here, there. Okay, it goes direct to the last column. All right. So what you do after this, you go to cost of goods. All right. Let me just write. Okay. Cost of sales. Okay. Cost of sales. Now, under cost of sales, we're going to say this is more like a title. We're going to start with the opening stock. Okay, so opening stock. Our opening stock is opening stock. So we have two stocks. We have 2020 and 2019. So 2019 automatically is our opening stock, which is 1,700. So this goes directly in the middle column, which is 1,700. Okay. Next is purchases. We add purchases. We have purchases here. So I'm going to say add purchases. Now, to purchases, we check if at all we have carriage inward. So if you look at this, we don't have carriage inward, we have carriage outward. If we had carriage inward, we would have added it to purchases to come up with the total purchases. So since we don't have, what we're going to do is to go direct to returns outwards if at all we have returns outwards. Now, if we check properly here, we don't have returns outwards or purchases returns. So this purchases goes direct in the middle column, which is so it is 32,000 is 32,000. Okay, since we only have these two and we don't have returns outwards according to this question here, the list, the information are given, we are going to close here. Then we're going to add the two. So when we add 1,700 plus 32,000, is it 32,000? Where is this? What is it? 32,000. 32,050. Okay, 32,050. Okay, 1,700 plus 32,050 is giving me 33,750 there. Okay, and to that amount is called total purchases. Total stock available. All right, total stock available. Okay, total stock available for what? Total stock available for sale, of course. Now to the total stock we subtract the closing stock, which is what is the closing stock? This is the opening. This is the closing. So the closing is, so we're going to say less closing stock. Okay, closing stock. Our closing stock is this one, which is 2050. Since we are subtracting, let's put brackets here, then a line below that amount. Then we're going to subtract 32,750 minus 2,050. 2050 is giving me 31,000. So this one you put it at the far end there, 31,700. So this amount, take note that that amount is called, this is total stock available. Then that one is cost of goods sold after subtracting the closing stock. So we're going to have cost total stock. Cost of goods sold. That is the cost of goods sold. Now, to the cost of goods sold, or to the cost of goods sold here, we are going to subtract. We're going to subtract this from the net sales. Oh, by the way, this amount is called net sales. Sorry, I didn't mention. This difference is called net sales or turnover. Net sales or turnover. All right. So when you subtract 43,600, we're going to have positive number 11,900. Now, the difference between the sales or net sales and the cost of goods sold is the gross profit. Okay, so this is our gross profit. Gross profit. This is our gross profit. Now, what do we do when you reach gross profit? When you find the gross profit, we are going to we are done with the trading account. That's all. This is the trading account. Then we go to the profit and loss. All right. We go to the profit and loss account. Now, the profit and loss account starts with the income account, which is the profit account or gains. Now, before we write income or gains, we check if at all we have income. All right. Yes, we have one. Discount, rent received. Anything receivable or which is written received is under income. So if you look at this, we don't have anything. We only have one. Since we have one, here we're going to say add income. Add income. Now we only have one income, which is rent received. Rent received. Since we only have one, rent received will go direct to the last column, which is how much is this? 900. Okay, 900. So this one is going to be added to the gross profit. It's going to be added to the gross profit, 900. We're going to have 12,800. That one is total income. Total income. Now, to the total income there, we subtract the expenses. So we're going to the loss account. So we're going to say less expenses. Less expenses. Now, let's check the expenses we have. Discount allowed is our expense. Let me do like this. It's our expense. This one goes to the balance sheet B, balance sheet. This is also balance sheet. Carriage outward is under expense. So let me just write E here. Expense. Bank overdraft is balance sheet. Insurance is expense. Office expense is an expense. Creditors balance sheet. Debtors balance sheet. Office equipment, these are fixed assets balance sheet. Cash, these are current assets balance sheet. So you only have 1, 2, 3, 4. You have 4 expenses. Number one is discount allowed. Discount discount allowed. Okay, discount allowed. Discount allowed, the amount for discount allowed, this one is for this one is for this. So discount allowed is 600. So we're going to write in the middle column, which is 650. Okay. Then the next expense is carriage outward. Remember, carriage inward is added to purchases in the trading account. Carriage outward is added or is included in the under expenses in the profit and loss account. So carriage outwards is okay. This one drawings. So carriage outwards is 500. 500. Then another expense we have is insurance. And insurance, according to this is 8,700. 8,700. Next is office expenses. Now, insurance is 87, so expenses is 7. Office expenses is 3-4. So we're going to say office expenses. Office expenses is 3,400. We are done. And what you do to these, we're going to add them. So 650 plus 500 plus 8700 plus 3400. We're going to have 13,000. So you add it in the you put it in the last column. 13,250. This one is called, since we've added expenses, this is called total expenses. Okay, total expenses. All right, we are almost done. Now the total expenses, we're going to subtract the total income, or if at all we didn't have any income, they have just subtracted gain, gross profit direct. So I'm going to say 12,800 minus 13,250. So it's giving me negative 450. But here, don't write negative, just write the 450 and put it in bracket. Since it's negative, this is not net profit. This will be our net loss. Okay? That's all. So you can copy. You can copy. This is our trading and profit and loss account up to the net profit, net profit or net loss. And in this case, we found net loss. Okay. All right. So the gross profit was 11,000. Total income 12,000. But we had a lot of expenses this year, this financial period. So which amounts to 13,250. So what you need to do is to subtract total income minus total expenses to know the cash you have or the profit you have. If it's negative, that is not loss, not profit. That is net loss. Remember, in the balance sheet, this will reflect in the balance sheet. This and the closing stock will reflect in the balance sheet. So let me just write the net profit, which is let me write it here. Net loss, net loss is 450 and it's negative. Okay, so let's go to the balance sheet. Let me just clear a space there. Okay. All right, let's go to the balance sheet, not trial balance, but balance sheet. So remember to write the title. So we're going to the question B, which is question 2, which is just 9 marks. Okay, so the title will be B Muchimba's balance sheet as at. This one is prepared as at. So as at 31st May 2020. Okay, then this is for details. This is for cost. This one is for depreciation. So I'm going to just abbreviate as DEP. And then on the other side, you are going to write net book value, which I'll abbreviate as NBV. Okay, which is the net book value. Okay, so we are using Kwacha. Okay, so in the balance sheet always start with the assets, the fixed assets. So I'm going to write the title here as fixed assets. So let's identify the fixed assets here. Okay, so we have office equipment. So from the top there, discount, capital, drawings, bank insurance, officer. We only have one. Exactly. Okay, we only have one. Okay, so the fixed assets, we only have one fixed asset here, which is office equipment. So we're going to write office equipment here. Office equipment. The amount for office equipment is 17,280 kwacha. Okay, so this is the cost, and there's no depreciation to this. Okay, so depreciation, we write nothing. Now the difference between depreciation and the cost at which the equipment was purchased is net book value, the value at hand. Okay, net book value is the difference between the cost and the depreciation. So since we don't have depreciation, this equipment hasn't lost any value. So the amount will still be 70,280 there. All right. Since we only have one fixed asset, then we just go to current assets. So I'm going to say add current assets. Okay, current assets. Now current assets, do we have debtors? Yes, we have debtors. So you have one debtors. Do we have cash? Yes, we have here, which is cash at hand. All right, cash in hand. Okay, bank overdraft is not a current asset. That's all. We only have two. So I'm going to say, we have three. That's where closing stock is also included. So I'm going to start with the stock. So I'm going to say stock, which is the closing stock. This is the opening stock is from 2019. Closing stock is 2020. So closing stock is 2020. That's a closing stock. Then we go to debtors. Debtors is 5,350. Okay. Um, Let me just let's put these in the second column, this column. Okay, 5,350. Okay, and the next one we have cash, which is cash in hand, and cash in hand is 910. 910 kwacha. And we don't have anything apart from this. We don't have anything apart from that. Okay, so we add the current assets. So we're going to say 2020 plus 5,350 plus 910. We're going to have 8,280. Okay, that one is, since we've added assets, that one will be called total current assets. Total current assets. Then we go to liabilities, which are current liabilities. So we're going to write current liabilities. Okay, current liabilities here, creditors are current liabilities and bank overdraft. So we're going to write creditors. Creditors in the first column, creditors is 2750. Then bank overdraft. Bank overdraft is bank overdraft is 990. Okay, so when we add these, we're going to 2750 plus 990. Okay, we're going to have that one is 4, this will be 4, carry 1, that one will be 7, then that one will be 3. So 3,740, that one will be total, called total current liabilities. All right, now when you reach this stage, what you need to do is to subtract the total current assets minus the current liabilities. So 8280, yes. Then it's giving me 4,540. This one is called the working capital. Working capital. Okay, so that is the working capital. Now, what we do when you reach this stage, we are going to add the working capital plus the total fixed assets. In this case, we only have one asset. So we're going to say total fixed assets 17,280 plus 4540. We're going to have 21,820. This one is called net assets. Net assets. Okay, the first part is done. Now the last part, we're going to say financed by capital Okay, financed by capital. Our capital here is 24,100. So we're going to say 24,100. 24,100 to this one. Let's check. Let's check if at all we have the drawing, the long-term liabilities. If we check, we don't have a long-term liability here. We only have net profit, net loss. So we're going to say here net loss, and our net loss was 450. So this was negative. So when you calculate there, 24,100 minus 450. So it's giving me 23. Okay, 23,650. Okay, then from that amount we are going to subtract the drawings. So we're going to say less drawings. Less drawings. If you check on the information here, the amount of drawings is 18,000, is 1,800. So we're going to say 1,800. We're going to subtract. So if you subtract that 1,800, it's giving me 21,850. Let me check. So let me check the fixed assets. So these two amounts, this is called working capital employed. So I'm going to say capital employed. Okay, so now these two have to be the same. If they are different, it means that there is somewhere where you've made a mistake. So you double check. Our net profit, our trading profit and loss account was correct. Okay, was correctly done. Then we check the office equipment there, the items. Office equipment was 17,280, which is same there, 17,280. Then next is stock. Our closing stock is 220. Oh, that's where the problem is. It's 2050, not 2. It's 2050, not 2020. Okay, so the mistake is here. So when you add again there, so these mistakes usually happen. Okay, 530 there plus 910. Okay, so why I've been able to identify the mistake, because the difference is minimal here. Okay, so the difference is minimal. You see this 21.8. So when you add there, is we're going to have 8,310, and not that one. So this one, when you subtract the total current liabilities, we're going to have 4. Let me calculate again. 8,310 minus 3,740. We're going to have 4,570, not 40 here, but 70. Okay. All right. So when you add that one to the current asset, total fixed assets, they are going to have, sorry, 17,280. Are going to have 21,085 here, 85, which is the same as this one. So meaning our balance sheet has balanced, okay? Meaning everything we've done is correct. That's when you can get 20 marks and everything. Consider subscribing if you've been with us. Okay, apologies. The quality of the video, we have power challenge in the studio. Thank you so much for watching.